So with the recent performance of the cryptocurrency market, a lot of people have been asking, what should you do during a cryptocurrency crash? Even if you've only started investing in cryptocurrency over the last 6 months or even 12 months, you've seen your fair share of dips and highs. One day we could be flying up 20%, the next day we could be down 50%. It honestly is just like a roller coaster. And whenever I talk to someone about investing in cryptocurrency, I always say, don't invest what you're not willing to lose. But for this video, I thought I would go over the 3 types of investors that I see in the cryptocurrency space and how I would handle each of them scenarios. So if that sounds like a good idea, if you guys could take 1 second to go ahead and drop a like on this video, it would really help me out. We're nearly at 4,000 subscribers. We're in the home stretch, last 100 subscribers to go. So if you want to become part of this channel, go ahead and hit that subscribe button as well. So just for a bit of context, cryptocurrency generally works in 4-year cycles, where you'll see a 4-year period where cryptocurrency is generally going up, and then you'll see a 4-year, what they call a bear market, where cryptocurrency is generally on the downward trend. This is also referred to as the cryptocurrency winter. Now sure, prices can still go up during this winter or bear market, but generally it's on a bit of a downward trend. And then when it comes up to the next Bitcoin halving, we generally see the start of a new bull run from there. Now I by no means am any expert in cryptocurrency space. I think it's such a new space that there aren't too many full experts out there, and nobody can really predict what's going to happen. We're just basically going off our best guess. So the first type of investor that we see in the cryptocurrency space is the long-term holder, and this is quite a common type in the cryptocurrency space. Generally, the aim here is that you're planning to hold cryptocurrency for at least 5 years, maybe 10 years, and maybe even plan to never sell, maybe keep it until it becomes the proper worldwide currency. But if you do choose this type of investor, here's what I would personally do. I would simply implement dollar cost averaging. So that means every single month or every single week when I have money to put into the market, I just consistently put that in. So let's just say it's 100 a week, for example. I would go ahead and I would just dollar cost average in every month, 100 a week, and then basically I'll buy the highs, I'll buy the lows, and overall I'll end up with a good average price across that cryptocurrency. What I would also implement here as well is just buying the dip. So whenever you see a drastic change, maybe something drops by 10%, that's also a good opportunity to be able to put some extra cash into the cryptocurrency market. In terms of taking profits, you wouldn't really do that with this strategy because you're just planning to hold for the long term. It's basically how much can you accumulate within reason. So there wouldn't be any kind of consideration to taking profits early on in your journey. So for this type of investor, when and if the cryptocurrency crash does come, all these really need to do is just have some cash on the sideline. When the dip comes, buy some more, and then beyond that, just keep dollar cost averaging in. It really can be quite simple. There's no really need to complicate it too much. Next up, we've got the medium-term investor, and this is probably where I would find myself in right now. And this is somebody who is a bit of a mix between a long-term holder and a short-term holder. And what I would adopt for this kind of strategy is I would dollar cost average into the market similar to the long-term holder. I would also employ buying the dip wherever possible if I had some extra cash. But then as well, I would actually take some profits. So I've covered off different exit strategies for the cryptocurrency market in general. You can check it up there on the iNotification. And I've also gone into particular on just the Ethereum side of things. So I'll leave that linked up there as well if you guys want to check that out. But essentially what I do is whenever it reaches a certain price, I would take a small bit off the table. So let's say, for example, Ethereum is currently trading at $3,000. Once that gets up to the 4,000, I may take 10% of my position off and secure that bit of profit. The main key with this one is to not be too greedy. So for example, as I said, if Ethereum does go from 3,000 to 4,000, you take that bit of profit. And if it does end up going to 5,000, not to worry, don't feel bad about it. Don't buy back in, just take a little bit more profit on the way up and essentially try to buy the dips wherever possible. Some people may say, oh, it's only gone up 1,000. I'm just going to wait it out, and then it could end up dropping back to 2,800 and you could have missed out on cashing in some profits. Whereas if you cash the profits, then you could have bought the dip again. So it is a bit of a discipline that you need to come across. So yeah, for this type of investor, if a cryptocurrency crash does come, again, it's similar to the long-term investor. Hopefully you have a bit of cash on the sideline that you're willing to risk in the cryptocurrency market, and you can take advantage of these dips. And as well as that, hopefully you are taking some profits along the way. Just set yourself realistic price targets for where you hope the cryptocurrency might go. And as I said, emphasis on the realistic part here. So for Bitcoin, for example, if it's currently trading at 42,000, maybe when it gets to 50,000, take a small bit off the table. As it gets to 60,000, small bit off the table. Then if it does end up dropping, at least you've cashed in some profits. So yeah, with this one, the aim for me would be not to be too greedy, cash in on your profits, dollar cost average, and also try to buy the dip. The reason that I say I'm a bit of a mix between this type of investing in cryptocurrency as well as the long-term holder type of investor is because I do plan to actually hold a lot of my cryptocurrency long-term, but I also plan to make some gains and cash in on some of my profits in the midterm. So in this this current bull market ends when people think it'll probably be around December, between kind of November and December this year, I will plan to have sold quite a bit of my cryptocurrency portfolio, but the plan would be for me to buy back in once we do reach that bear market or crypto winter, and then kind of hold long term into the future. And the final type of investor you see in the cryptocurrency space is one of them guys who's always looking for the next meme coin, the overnight millionaire kind of guy, essentially the short term trader. Now, of course, you can make some money doing this type of investing style, but my best advice for this one is just best of luck. Of course, it's a big gamble trying to cash in on these. You know, you do all your charting, different kind of analysis like that, but that can only get you so far. Cryptocurrency market is quite irrational. Some bad news could come out of China instantly, and that could really mess up your technical analysis that you have or your charting that you've done. So it really is a bit of a gamble. No matter how much study you do of the charts, it could literally just go the opposite way, even if it's looking like it's indicating of going one way. So for me, it's not really a strategy that I try to employ. Sure, I do some of it in the short term, like in my previous video where I talked about Ethereum. I said I was expecting it to go to 4,000, where I would sell a bit and then buy back in on the dip around the 2,800 mark, and I did actually manage to execute that strategy. So definitely money can be made, but for me it's just too much of a risky game, and I prefer the long-term or mid-term holder mindset. So essentially, just to summarize, no matter what type of investor you are, when and if the cryptocurrency crash does come, just stay calm. Hopefully you don't have money invested into the cryptocurrency market that you feel that you can't sleep well at night if it starts to go down by 50%. That's generally a good thing to think about. So if my portfolio right now dropped by 50%, would it have a major impact on me? And if it does, you probably have too much money invested. But for those of you that do employ that don't invest what you're not willing to lose kind of mindset, basically just try buy the dips if you have any extra cash and you still have conviction in your cryptocurrencies. As well as that, don't be afraid to take some profits on the way up, and it really is as simple as that. Hopefully you did enjoy this video, guys. Let me know your strategies in the comment section below. Would love to hear them. And as I said, if you could take a second to drop a like on this video and also subscribe if you haven't already, it would really mean a lot. Thanks for watching, guys, and I'll catch you in another video.